presentation. We have the management of IVL sitting, starting from on the left, Mr. Sanjay Ahuja, the CFO of IVL. Then Mr. D.K. Agarwal, CEO of Feedstock and PET Business. Mr. Alok Lohia, the Group CEO. And Mr. Uday Gill, CEO of our Fibers Business. So with that, I would request Mr. Agarwal to take you through to the presentations. Thank you.
Very good afternoon. Welcome to the second quarter 2017 results, which is one of the record. Second quarter like this. Yes, script ka lakhda ho gaya. So that's the problem with the script anyway. So welcome to the third quarter 2017 results, which is one of the record results. Go to the next slide. During the first 9 months of 2017, we achieved a very strong earning, a growth of 49% in EBITDA of $749 million, which is actually on track to deliver about $1 billion in annual EBITDA for the first time in 2017. Our vision of doubling IVL EBITDA has been achieved in 4 years rather than 5 years. That's what we had promised earlier. So this beats our expectation. The strong earnings are driven by feedstock and PET segments, led by ongoing strategic acquisition and improving margins respectively. So there's a lot of improved margins and the strategic acquisitions which has added to the bottom line. Our HVA strategy continues to deliver enhancement to our earnings in every segment. There is a positive structural change in PET business in the West due to financial stress with 2 major PET producers. So what exactly has happened that M&G and JBF has passed through the financial stress. So they shut down the plant in US and Europe. That had created a structural change. And what's happening that we are going back to the margins of previous years, which was much below the import parity. So you have seen some results in quarter 3, but you will see the positive impact coming in entire 2018. And that's a structural change, a positive structural change in PET business. This, of course, opens up the new acquisition opportunities for growth. As you know, these companies have gone into Chapter 11, particularly in M&G, gives us opportunities to acquire some assets. And this may add new geographies for IVL. So last 12 months, we have achieved an EBITDA of $953 million, which is a record earning. Next slide. Our growth strategy is paying off. As you can see in this slide, how the earning per share in last 12 months has gone up from 35 stang to 2.72. Our strong operating results is the basis for our consistent and superior EPS growth of 15% during 2013 to 17. IVL today outperforms, demonstrates the quality of our premium portfolio, diversified product range, the value of our acquisition, and strategic investments. And most importantly, our ability to focus on execution and deliver results. I always say it's easy to acquire, but difficult to execute. And we have shown our performance that we have successfully integrated all those assets and delivered the results. To deliver strong growth and performance, what we have moved further, we expanded our HVA portfolio. You must have heard about a new vertical, DuPont Teijin Films acquisition. This opens up a new opportunities for IVL, as we'll be able to expand the polyester film, which is very much attached to our polyester business. And we see a lot of consolidation opportunities in this business. We also acquired Durafibers, which adds up to our tire cord portfolio. We enhance our feedstock business in Europe with Rotterdam PT expansion. Now this Rotterdam PT expansion has just started ramping up. You will see the results coming in 2018 as we ramp up the production and fully in 2019. You also heard the announcement of Heartland PTA plant. It's a very cheap acquisition. This has a capacity of 700,000 tons. Europe and Turkey has a deficit of about 1.2 million tons. So this will also add to the bottom line as we start in the second half of this next year. We made our balance sheet even stronger with a successful warrant 1 exercise ranging in excess of $450 million, while upgrading our A+ credit rating to positive from stable by TRIS. We achieved an excellent 5-star corporate governance rating conducted by the Thai Institute of Directors for the 5th consecutive years. Company remains focused on softer things. We made our debut in the Dow Jones Sustainability Index, a very reputable index, ranking among top 5 of all global chemical companies. To be listed in this important index is a confirmation of our exceptional management in the sustainability leadership. This is very difficult to list on DJSI, which helps us in our business. As a result, IVL today has built a track record of consistent and superior results across all of our businesses and are pleased with the progress we have made to date because the things are being delivered. Let's talk on the financial results. This gives you the performance. From a performance perspective, this has been another record quarter of IVL with EBITDA per ton of $122 per ton, which is the highest ever achieved over the last 23 quarters, and we are very pleased that ROCE in this quarter is of 15.8%. Both third quarter core EBITDA and LTM third quarter 17 are up by 34%, as you can see. The EPS went up by 59% in third quarter versus third quarter 16, and LTM third quarter 17 is up by 75%. This is the third consecutive quarter where IVL has achieved EBITDA per ton in excess of $100 per ton, reflecting both the quality of an improved portfolio and also of a gradual change in the margin scenario. We have been suffering poor margins in PET, particularly in the Western markets, and this is changing now. There is a positive, as I was mentioning, structural shift in the PET business, with PET margins recovering back to the historical level seen in 2015-16, as reflected partially in third quarter earnings. This is despite being negatively impacted by the cost increase. You know, the IPA cost has been very high, by about $10 per ton during the last 12 months. But this cost impact has been more than offset by gain in the feedstock segment, since IVL is one of the world's leading producer of IPA. So we lost in PET, but we made much more in the feedstock segment, as you can, and we are doubling the IPA production next year. And 2019 further increases. The fiber segment benefited with the consolidation of high-performance rayon tire cord business, Glenstoff, but the overall earnings were negative due to plant turnaround at the flagship site in Indonesia. So we had a shutdown, and as a result, fiber did not make much more money as compared to the last period. Glycol is having a good margin. Our EOAG facility enjoyed much better margin, and normal volume in USA followed a plant turnaround in second quarter 17. So you can see the glycol results have been better. The most interesting part, which is the gas cracker in Louisiana. I was just talking yesterday, the mechanical completion will be by end of November. We are very excited about this project, which is at a pre-commissioning stage, 95.7% complete, and will start production in early 2018. As crude is moving up, the EBITDA potential of this cracker can be up to $140 to $150 million as the crude goes up, because that is what we. So this is a very exciting project which is coming up. In the face of unusual seasonal weakness, fourth quarter is still on well track to deliver strong year-on-year performance in favorable market conditions, mainly due to disruption of PET supply in Europe. You know, Europe is tight, US is tight, Middle East is tight. We're getting much better premiums. But aromatic business has turnarounds in fourth quarter of the paraxylene. In paraxylene, we take shutdown every 5 years. So this is fourth quarter, there will be a 60-day shutdown. And PTA and NDC businesses. Although the fiber segment and EOAG business should help offset some of the earning impact from seasonal turnaround. So fourth quarter will have an impact of shutdown, but then there is improved earning coming from PET. But it is basically impact of turnarounds. Now let's go to the feedstock. Moving next to the segment results with feedstock, which delivered a strong quarter and LTM performance driven by strategic investment in advantage feedstock. Third quarter core EBITDA grew up by 676%, and LTM third quarter 17 up by 120%, as you can see in this slide. The Western feedstock portfolio improved the restart of the PTA facility in the Rotterdam, which has been shut down in second quarter to support the completion of the brownfield. So we had the third quarter, and now it is in the ramping up. The restart of the EOAG facility in the USA following plant turnaround in second quarter 17 also impacted feedstock production volume positively, and production volumes were marginally impacted by Hurricane Harvey. So there was some small impact, but overall you can see a substantial growth in the earning and feedstock of $476 million versus $217 million. The completion of the PTA expansion project in Rotterdam in third quarter 17, the benefit will start accruing partly in fourth quarter 17, but mainly in 2018. The commissioning of ethylene cracker in USA in the next few months and the significant increase of IPA volume in 2018 and in 19 will provide a strong contribution to IVL earning in 2018 and beyond. So just as I was telling you, cracker will bring $120 to $140 million, IPA doubling next year, Artland, which will start in the second half, and of course, if there is any improvement in Asian PTA margins, which are actually happening. Some improvement is there. China is recording better margins, but that will be all bonus in 2018. So that feedstock is getting very exciting. PET, again, the results has been very interesting. Moving next to the segment results with PET, which delivered a strong quarter and LTM performance driven by structural changes in Western markets. As you can see, in third quarter, we have EBITDA of 84 million versus 72 million, same period last year, a growth of 17%. The LTM is down, not because of performance, but because of the impact of IPA. So although the overall PET volumes were negatively impacted because we deconsolidated India JV, in last year there was a India JV, but this year we deconsolidated it, got offset by increasing demand in the West for IVL products due to the industry supply tightness as mentioned earlier. Now, as I was saying, the full benefit of this structural change is likely to be realized in 18 because we had the contracts this year at the old prices. Now in 18, the new contracts, because there is shortage of product in US and Europe, are being done at much higher prices, which will basically result into a better profitability for PET in 2018. You must have heard today that USA has started anti-dumping action against another 5 countries, which will further, the imports from that countries has been about 350 to 400,000 tons. So this will allow us to further improve the pricing. And as you know, Japan has initiated anti-dumping against China. So all these, IVL has manufacturing locations in different countries. I mean, I can ship to Japan from Thailand, I can ship to Japan from Indonesia. So you start getting the pricing premium for that. So PET will benefit next year from the improved margin, as you saw in the third quarter results. And and 18 will be also having some debottlenecking of the assets. So PET is moving, I say, a point of inflection where the margins are improving. Coming to fibers, which delivered the results driven by plant assets turnaround, as we said in third quarter. The third quarter core EBITDA was down by 3%. LTM third quarter was down by 6%. The plant maintenance shutdown of an Indonesian facility impacted fiber production volume. To a lesser extent, volume in some of the HVA fibers in the USA were also impacted by disruption to the supply chain by Hurricane Harvey. But the completion of Glenstoff acquisition in Europe, successful acquisition of Durafiber in Mexico and France, as well as announced project in China and Indonesia will help to grow the HVA portfolio within fiber business. So we are expecting 2018 to be an interesting year for fiber too. And this will further grow the impetus to the earning of the company in the forthcoming quarter. So we have as you can see, a creative pipeline of greater than 10 HVA expansion projects, which will show a margin improvement. So we talked about different segments, PET, feedstock, and fibers. Now let us talk regional. It's very important. Today, North America is the star of IVL, which contributes 44% of core LTM EBITDA. And you can see the ROCE is 17.2%, and third quarter LTM is 13.6%. Production in North America has grown following the full year benefit of the acquisition of PT and NDC. Facility indicator, you know that we have a very high value-added product. NDC, we are the only producer in the world. Margins for the necessity business expanded with higher volumes and the advantage of capturing a large part of the value chain. And EOAG margins remain strong, and volumes were also higher following the plant turnarounds in second quarter. You know that we changed the catalyst. We are having a very good production rate, and the margins in glycols are going up. And again, I remind that as the crude oil goes up, these margins further improve. Earning from HVA segment also expanded, particularly NDC, as a result of higher volume of NDC. Now, as you saw the structural change, what is happening, I think many of you have covered in your analyst report in a very substantial way. M&G Polymers, which has a large producer of PET in North America, filed for bankruptcy under Chapter 11. Now, this has created a gap in the domestic. Even Mexican plant was shut down, and this created a gap in domestic supplier where IVL and other producers are trying to bridge timely in order to keep the market fully supplied. You know that we have been a supplier of PTA to M&G Polymers in Apple Grove. So we have taken an impairment of $39.3 million net of taxes. The gross was 53.8, but deferred tax is about 14.5. So that has been an extraordinary loss in this quarter. But IVL stands to benefit today from the PET margin expansion, and 2018 will see the full impact of this improved margin. And in North America, the other thing will be the ethylene cracker, which will be starting in the first quarter, which will add. So North America continues to be a star in our portfolio. If you look at the Europe, third quarter 17, the ROCE is about 25.8%, fantastic return, and LTM based is 18.8%. So on a LTM basis, production in EMEA has increased as a result of full year benefit of PTA, IP, and PET assets acquired. We acquired Cepsa in April 2016. Again, JBF's financial distress resulted in yield closure, which resulted into shortage of the product, and the margins again in Europe improved, and they became now higher than import parity. We have been suffering in the Europe in the margin because of the, the lower than import parity. So EMEA, as you can see, continues to deliver strong earning with triple digits of core EBITDA per ton for the last 3 consecutive quarters, also supported by our IPA business, which is doing pretty good. Earnings from EMEA are set to expand. Now next year, what do we see? We have a PTA Rotterdam expansion, which should add 35 to 40 million euros of EBITDA. Restart of the Heartland facility, 700,000 tons, which will start from second half of the year, July. And doubling of the IPA production as we have tied up the metaxylene. As I told you last time, the IPA is driven by metaxylene, and so we will have doubling the IPA production. So this will improve the EMEA results further. Asia remains laggard. Asia, as you can see, the ROCE is 6.5% third quarter, and which is still remains low because of poor margins in PTA. So core EBITDA and ROCE were weak for the quarter in LTM due to deconsolidation of India PET business, and earnings were also impacted due to the plant turnaround of the PET facility in China and fiber facility in Indonesia. Margins in PET in Asia are showing some improvement, which is, of course, negated by IPA cost increase due to tightness of the product. As you know, everybody is pulling from Asia for Mexico deficit and Europe deficit. Chinese PTA margins are expanded and demand is expected to get a boost. The good news is that Chinese polyester industry is growing by 12%, which is a very healthy growth and which is creating more demand for PTA. And you might have also heard that recycling, the waste is from this next year, there will be no import of recycled waste. And this bales, which were converted into fiber, into the recycled fiber, will be replaced by virgin fiber. Now this helps in fiber deltas. It also helps in improved demand of virgin PTA in glycol. So this is very positive of this development. In the foreseeable futures, IVL earnings from the regions are also expected to improve with the ongoing performance fiber expansion. As you know, we are expanding the performance fiber and the completion of new tire cord facility in China. In addition, there is an ongoing expansion for necessity fibers in Indonesia, which is due for completion in second half of 18. And the recent acquisition of DuPont Teijin, of polyester film, which will add EBITDAs in all 3 components. So all these 3 regions, you will see the increase in the earning. Next. Now look at turning to the portfolio, very diversified portfolio. IVL has consistently delivered you. Portfolio today is stronger than ever, more global, more integrated, and more differentiated. I think that's the key. It is global, geographical diversification, integration, capturing more value chain, and very differentiated product line. IVL's leadership position in advantage feedstock, large polyester position in polyester feedstock. We control 11 million tons of volume. A small fluctuation in the margin adds up in the bottom line, as you saw in the results. And global leadership in PET and fiber business place IVL as uniquely diversified and integrated company in the context of its businesses. HVA strategy, which IVL followed, today on a LTM basis contributes to 50% of the earning, together with diversity of revenue streams and higher returns. Rest was contributed by necessity. So what is exactly happening that you have HVA portfolio, you have a necessity portfolio, you have Western necessities, Eastern necessities. So all these creates a good hedge. Today feedstock contributes to around 50% of the earning, making it the single largest segment, and provides IVL the ability to capture a larger portion of the value chain as well as reliably meet customers' need across geographies. This recent turmoil has proven that IVL is one of the most reliable supplier, and we are seeing customers, acceptance on that, and that helps to get the first right of refusal from the customer. Between 17 and 20, IVL is committed to investing around $1.8 billion on identified opportunities, which includes the DuPont Teijin, Artland, and others. Additionally, and during the same period, IVL believes that there will be financial headroom, because we recently raised warrant one of around $3.5 billion for further investment, of course, based on internal management projections of internal cash accruals and prudent borrowing. In 2018 and beyond, IVL is poised to continuously upgrade its business profile in a disciplined manner and pursue its consistent strategy of prudent investments in HVA businesses, integration into key feedstock, and timely investment in key geographies. IVL never will lack the opportunities. As you can see, there are many opportunities coming up with the financial stress, and these are the good times to acquire. Recent industry turmoil is opening up for IVL new acquisition opportunities for growth and leadership through consolidation of existing and new geographies. Well, still, Asian PTA remains a laggard, and any improvement in Asian PTA. In any business, the returns cannot remain consistently low. The Asian PTA suffered for 6 years, and remember, if Asian PTA goes up, the entire value chain goes up, because imported PET drives the price in Europe and US. So it does not bring only Asian PTA margin, it creates a chain effect. Let's concentrate on what is our financial profile. As I said, we made our strong balance sheet even stronger. You can see the debt equity of 1.06 had dropped to 0.57, September 17, and considering the ongoing projects goes to 0.80. In addition to strong cash flow generation driven by robust performance, we strengthen our balance sheet with our successful subscription to the exercisable warrant 1, and warrant 2, which is in 43, is already in money today. So that's going to come in August, right? I will receive an additional equity of $452 million. This not only helps deleveraging the IVL balance sheet, but also provides us the necessary firepower to pursue our growth strategy via M&A in favorable market conditions. So it gives us a very strong balance sheet for growth. IVL has a strong commitment to investment grade rating. TRIS rating, an associate of S&P in Thailand, has reaffirmed IVL's rating of A+ and revised upwards its outlook to positive from early stable. So IVL enjoys a very, very strong balance sheet today. Let's talk a little bit about DuPont Teijin. This is a new acquisition creating a new vertical for IVL. We see a lot of opportunities in this business, which is fragmented, and there are consolidation opportunities. So IVL creates value with each acquisition. Acquisition of DuPont Teijin, which is likely to be completed by end of the year or early January, marks a new chapter for IVL, representing the continuation of IVL's proven HVA strategy. DuPont Teijin is a joint venture between DuPont and Teijin, the world's premier producer of BOPET and PEN HVA films. Let me tell you that the NDC has a synergy with this, because they make the PEN film. So if you have the raw material, you can further grow the value chain. This DTF provides prudent growth in industry related to our core businesses and is a strong foundation for future growth. Again, a high growth industry. Global consumption of BOPET, or the polyester film, is increasing at 7% CAGR per annum, and there are increasing application and end use. As retailing changes, the packed foods come in, this is growing rapidly. It's a very strong history of R&D with over 700 patents, which makes us a strategic fit with our own innovation capabilities. So we are getting a lot of innovation platform and the management talent with this. We'll be able to increase our PET integration and create value enhancement opportunities through captive NDC. As I was saying, NDC translates into PEN. This includes 8 production assets in the US, Europe, and China. We have a 51% shareholding in China with a global innovation center in the UK. So a lot of talent. This transaction is expected to be completed in late 2017 or early 2018, of course, subject to the regulatory approval. So this develops a new opportunity for us and new vertical for us. A little bit background on Artland. Artland is a PTA plant in the Sines Industrial Complex in Portugal, a large PTA producer in Europe, which has a 700,000 tons. It is very identical to our Thailand plant, Indorama Petrochemical, same technology. And this adds up, makes us the largest producer of Europe with this acquisition. It fortifies our PTA business as a part of our successful vertical integration strategy. Even after Rotterdam expansion, we are 200,000 tons short in EMEA. So this will supply captively, and we will sell in the merchant market. We can apply our scale and operational expertise while taking advantage of cost synergies and capture the opportunities for future growth. Artland creates opportunity for growth, resilience, margin enhancement as PTA Asia and freight rates. This is a very cheap acquisition. We haven't given the numbers, but it's very low price acquisition, much lower than replacement cost. And Europe enjoys a free trade agreement with Mexico. So, Artland is strategically located with a free trade agreement. IVL will also acquire the assets of an adjacent utility provider. So there is a utility asset, Artelia, which has a capacity of 40 megawatt of electricity, steam, demineralized water, and hydrogen and all that. So it makes this facility highly cost competitive. And we are excited about this. This is expected to be closed in fourth quarter 17, and we'll add 700,000 tons. And the earning will start coming from the second half as we start ramping up. So today, IVL creates value through business diversity and integration, as you have seen, products, geographies, consumers, segments within its unique value chain, as we have continuously proven you in past. This actually puts IVL in a unique advantage as it enables higher value chain capturing, enhances earning stability. We are not in refinery. We are not in petrochemical business where margins are high and low. We have been suffering with low PET margins, and now we see the PET margins coming slightly better. It creates reliability of supply and results in advantage cost position. With acquisition of DuPont Teijin Film, now IVL expands its polyester value chain to become a unique and complete company in the industry in terms of integration and diversification. So this new vertical, which has a lot of synergies. This acquisition provides IVL with immediate synergy potential through captive PET polymer and NDC feedstock integration. So as you can see now, there are still many gaps where we have virtual integrations. IVL will continue to look at opportunities as it comes. Now, coming to the feedstock projects, the projects which are in pipeline right now, as you know, the Rotterdam PT expansion, we just completed in August. It is in ramping up process. Fourth quarter will have just small benefit, and 2018 will have a full benefit. US gas cracker mechanically getting completed, and we expect to start early 2018. And it's going to be just replacing the ethylene which we are purchasing. So we are very excited about this project. We will be the first Thai company to have a shale gas play. And IPA volume expansion in Spain. We have 50% increase in production. Basically, we have tied up the metaxylene, and as I said, 2019 we'll have further meta available, which will actually ramp up this. And we are the only producer of IPA, and with this, all these places us as one of the largest producer of IPA. So just to summarize, IVL 2015 to 17 outperformances. IVL demonstrates the quality of our premium portfolio, the value of our acquisitions which we have done, and strategic investment, and most importantly, our ability to focus on execution and deliver results. Today, we have so many sites around the world. We have achieved our vision of doubling EBITDA in 4 years, as you have seen. We delivered consistent EPS growth during the same period. We upgraded our business profile through selective growth and investment in scale HVA integration. Our balance sheet, some of the people you may know why these two companies fell. It's because the balance sheet was never strong. They were embarking the projects which were much larger than their balance sheet on the basis of future earning. This doesn't work. MNG's original project cost was 1.2 billion, landed up into 2 billion plus, and that's where the financial stress came. And same with the JBF. So we are very conservative. Our balance sheet is strong. We raise the capital first before embarking for expansions. So this provides us with firepower, advantage necessary to execute on our inorganic growth strategy. It's important in the changing environment today. The sustainability is so important. To be listed in DJSI is a confirmation of our exceptional management in the sustainability leverage. I will always rewrite the chapter. So we start a new chapter of growth for IVL. Key drivers for 18 and 20 to growth are full impact of our recent acquisitions which we did and strategic investments. We'll have the crackers starting up, and as I said, IPA doubling. Disciplined growth and investment in HVA and integration, and positive structural change in PET margins with opportunity to lead further industry consolidation. As you know, 2.4 million tons of capacity is available. New acquisition opportunities in new geographies, although we are 20% of the market share in the world, but will further enhance when we acquire some more assets. And at last, Asia should improve. Asia has been a laggard. So thank you very much. Now we can take your questions if there are any. Anyway, you guys have covered fantastic in all your analyst reports.
So who wants to ask the first question?
Yes, please.
Yes, Kulpum.
Thank you, since no one asked. Actually, I have a few questions, if you don't mind. The first one, it's about the PERP. Assuming that you will get all the money from the warrants, right? What's your plan on the PERP? Are you planning to repay it? And if it is a repayment, I'm not sure whether is it subject to call or that the whole amount will be paid. How does it work there? And after you repay that, what will be your spending ability, including the ability to leverage up your balance sheet after the warrant exercise? I just want to see how much more you can spend to acquire assets.
Sanjay?
The PERP comes up, PERP, as you know, was issued in 2014 and it's a PERP, but it has the feature of call in 2019 October. So we have the ability to call that in 2019, but I would say that we would take this decision closer to that date, whether we would call or our balance sheet would want to continue with it. But you're right, if it was called, then it would be a much lower pricing going forward. Leverage, in terms of what is the ammunition available with us or the resources, financial resources, I think we have mentioned before that during this plan of 2017 to 2020, our operating cash flows will give us around $4 to $5 billion of availability for new capex, out of which around 1.5 billion has been announced.
But that was not taking W2 into account.
W2 into consideration.
So with W2, so we had 5 billion, of which 1.5 billion is committed, leaving 3.5 billion. So our headroom, the way we calculate our headroom is 1:1 net debt equity. If you add to that 3.5 billion, the warrant 2 of $500 million plus the ability to leverage at one time. So basically we would still have a 4 billion, 4.5 billion ability to spend. So what DK was saying in the presentation, we have a fairly strong balance sheet. So all these opportunities that may come up, we have the ability to do them. I think where our ability will get restricted in the present portfolio of PET assets, and especially in America, would be on the antitrust. I think in Europe, we don't have a problem. There are lots of producers and a lot of imports. But in North America, especially in USA, we have a very sizable business and the number of players are limited. So we have to see how successful we are in USA itself. More, it's not balance sheet driven, it's more driven by antitrust.
Can you explain the dynamic of contract and spot sales volume, and like how much? I mean, you talk about repricing of 2018 volume, and we have already seen some improvement in your third quarter number from the higher PET in the US. So I'm not sure how much has already been reflected in your third quarter, and how much more we should expect in 2018 because of this dynamic. Yeah.
So normally the agreements are done on annual basis. In the calendar years, they will expire. Some of them are 2 years, so some will continue in 18. In the third quarter, what you saw was the improved spot component, where they were linked to market linked. In 2018, we'll have a full benefit because of the new contracts being entered in US and Europe. Now you're talking of nearly 2.5 million tons, which is sold in these two regions. And I don't want to give you numbers here, but I think it will significantly improve the PET. As you see, last 2-3 years, the margins in US and Europe. First is this M&G's Copper Christie project was just a threat, Customers were using this as a threat. This project is coming, reduce the margin. So everybody wanted to keep the market share, was reducing the margin for last 3 years. Now suddenly they realized that the facility stopped. So they started booking at higher prices. So we started entering at higher prices of nearly 3 to 4 cents per pound, which is $70 to $80, and partly which is reflected in the spot deals in Q3. So I think as we approach the end of the year, it is a very positive direction. Again, yesterday's news of North America initiating the US initiating the anti-dumping against 5 more countries further makes the customers nervous. This structural change is significant. As you know, 3 players were controlling 90% of the market share, and depending on how these assets are sold of M&G, there will be a further concentration of the industry. And so these margins improvement will be a long play. And certainly you will see PET margins profitability much better.
And please do not underestimate this announcement yesterday of anti-dumping. The final results will come on 5th March. But I doubt that customers in North America would wait till 5th of March to make their bookings. So we have done 2018 deals, some of them. Some are in negotiation, but the timing of the anti-dumping announcement
It's perfect.
is very helpful to us. So we did lose 4 cents of margin over the last 3 years. Our intention would be to recover that. And remember, we also lost margin because of the IPA increase. So now we basically would like to at least recover partly the IPA increase and the lost margin over the last 3 years.
Another important aspect, don't negate the duties which Japan has put on China. Japan is a big importer of 450 to 500,000 tons of PET. Now, since China has huge duties, we have plants in Indonesia, Thailand, and a JV in India. We're going to supply from there and at much better prices. So in Asia, also our margins will improve because of these developments of anti-dumping.
So the mix between contract and spot will be what's the split?
Depends on the country. Like in US is 90% contract, 10% spot. Europe is 70-30. Asia is more inclined towards spot. So it's different. So actually, the impact will start coming in 18. When more and more contracts. But some contracts are for 2 years, so then naturally you can't get on everything. But that's a very small portion. And it is not easy to import in US. This was the psychological fear of this plant which was coming up, that people were reducing the margins. You have to move by rail cars. It's not easy like in any other countries. So there is a natural barrier, and normally there were premium of 2 to 3 cents over import. So you are getting there, you know.
Can I ask question? First one, I want your view in terms of what could be the period of the MNG bankruptcy filing that you think could prolong, let's say into next year, or in terms of the procedure, can you explain that, and how the impact could have on the industry during the period?
Very good question. MNG had 3 assets: Apple Grove, Altamira, and Brazil and Corpus Christi. Brazil is still running. Apple Grove and Corpus Christi has filed for Chapter 11. Corpus Christi is a plant which is not complete, so it takes 3 to 4 months, this entire process. So next year, every customer knows that there's no new capacity coming in. Once the Corpus Christi comes out of Chapter 11, you have to remobilize the assets. It's not easy, you know. You have contractors, you have to remobilize them. It takes time. So we don't see any expanded PET capacity in US coming up early, even in 18 end or even first quarter 19. And the PTA plant is not expected to come before 19 end or 2020. You know, we have interest in entire PTA PET value chain. There will be in Chapter 11, naturally, you know, the court has to pass. Mexico just started production a little bit, but still it has to go Chapter 11 because there's a lot of debt in Mexico. So the market is still very tight in both Mexico and US. And of course, we will look into all those opportunities and we'll let you know as situation folds, you know.
And let's not forget, MNG also has a very, very large facility in Brazil. So Brazil, Mexico, and US, and the new Corpus Christi.
JBF also, as you know, in Europe, 430,000 ton capacity shut down, which really created a big problem in European market. The European market is already importing 600,000 tons, and this made it worse. So still that financial stressed asset is find a solution. So we are seeing in Europe also, the contracts are being done at higher by 50 euros per ton, new contracts. And we sell 1.1 million tons in Europe. So it's all positive happening, which was, you know, much below low import parity. And customers are realizing how important it is to have a reliable, financial, stable supplier. Brand owners, converters, everybody.
Could you please help us understand the PET cost dynamics? Because if you see the spreads in the West, they have increased by $60-70 based on the quarter-on-quarter. But if you look at the EBITDA per ton, it has only increased by $20 odd. So what has happened there? And how can we think of the costs going forward?
It's just a combination of contract versus spot. So we could only take advantage of the spot sales. The contracted sales, we cannot reprice. That is what we mean that in 2018, most of the sales will be new contracts with the new pricing. But in third quarter, the advantage we could get was only on the spot sales. And in quarter 4, it will be the same. Because roughly in the West, let's say 70% of our sales are contracted, which did not yield any benefit.
Also, could you please help us understand the China recycling ban as to how much of PET gets imported in China and what can be the potential impact on fibers demand as you spoke earlier?
So we believe that 2.5 million tons of scrap is imported into China, which goes into the fiber as recycled fiber. So that 2.5 million ton was scrap. The yield on that scrap would be about 70%. So about 1.7 million tons of PTA equivalent fiber needs to go now to virgin PTA. Maybe they'll be able to get some scrap from some other places, but at least 1.5 million ton of PTA, new demand, will come into China. So that will help improve the balance of the oversupply in China. You know, PTA, there's a lot of PTA overcapacity in China, which is getting better. This year we already saw an improvement of PTA spreads in China by about 25%. And the scrap regulation is only starting from January next year. So from January next year, we expect that there will be more PTA consumption within China, which will further help the local producers resolve discipline to improve the spreads. So as the Chinese spreads of PTA improve, it will start reflecting in the rest of Asia. You don't see that in IVL Asia at the moment, because IVL Asia was already selling at a premium to China spread. You know, when China was selling at $70 spread, IVL Asia was selling at $100. So today China is selling at about $95, still below the IVL spread. So we do not see that translate into IVL Asia right away. As China spreads go over 100, we will start enjoying that in IVL Asia. Because some of you may be confused that why does IVL Asia PTA spreads or EBITDA not reflect the increase in the China spreads. The only reason is we were selling at a very high premium to China spreads in the past. We will maintain some premium in the future, but we had put a floor on our sales. What we had done in the last 3 years, we were limiting our supply. Our capacity in Asia is more than what we produce. But we made a principle that we wanted to only produce at the price which got us $100 of spread. Now there is upside going forward. The spreads will go up, and we will also be able to increase our output. But in the whole scheme of things now, like Asia PT has become a, it's only a 10% factor.
Yeah, but we always look for Asia PT improvement, because if it improves $10, this means PT price in China improves by that much, $10 to $15 whatever PTA. This means import parity in Europe and US goes up. Then I can charge higher price to the customer. So it's a value chain impact, and that translates.
Sorry, I have two questions. Can you explain what were the reasons for the delay in cracker? I noticed that there are some few months delay. And secondly, if I remember correctly, cracker EBITDA used to be running about $140 million last time, and this time you were expecting 100 to 120. Is it because of the rising raw material price or other factors? And secondly, could you add some color on the timeline of the IPA doubling capacity and the new supply from methacillin? Thank you.
So first thing, the raw material prices in US has not gone up. The EBITDA, I think we're still targeting 140. And if I really commented, if you remember, that if crude oil goes up, this further translates into better profitability. So ethane is still continue to remain cheap. The gas is $3 a million BTU. There are new crackers starting up. Dow's and many crackers are starting up, which actually should affect the polyolefin chain, like polyethylene, because most of them are polyethylene plants. So we are, and there are a lot of byproducts which comes out of the cracker, which helps when the crude oil price is high. So we are still very strong about those EBITDAs. It will depend on how, but there's no raw material increase. The delay in cracker of 2 to 3 months is normal because we are restarting a cracker. But we are very glad that after a lot of discoveries and Harvey impact, when Harvey hurricane came, this really disturbed. And the mechanical completion is happening as by end of this month. Then there's a pre-commissioning, nearly 70 systems have been commissioned. And we feel very confident that in this first quarter, this will start February, March. We already have a swap deal in place for ethylene. So basically, as soon as it comes, it replaces my ethylene purchased, which I'm buying for my glycol plant. You asked, your next question was an IPA. There is an existing meta available, which we contracted already beginning from January 2018, which will be available from shipment January 18. And in the Spain, so this increased production in Spain will be available from next year. This will be nearly doubling the capacity of IPA. Then SEPSA Spain is building up another meta plant, which will be available in January 2019, and that will be available from 2019. That's another 70 to 75 KT. So this IPA business is more driven by who controls the raw material. And it's not economical to put a small IPA plant. It is very expensive. So normally you convert a PTA plant into IPA, and that's exactly in Spain when we acquired, this plant was converted into IPA. And that gives I think those were the two questions, am I right?
Just to add to that, so basically the IPA business is going to become 2.5 times of 2017 by 19. But some of that production would go into the inventory, since we'll be shipping that around the world. So when we say 50% in this presentation, 50% would be sales, 50% higher sales in 2018, because we already took the impact of inventory. So we have, just to be even more clear, we have 70,000 tons of metaxylene today. We have another 100,000 tons of metaxylene from January 118. Out of the 100,000, 30,000 we were buying in 17. So our meta increases from 100,000 to 170,000, a 70% increase. Part of which will remain within the system because of the transit. So the sales increase would be 50%. But then in 2019, we get another 70,000 tons of meta. So we'll have total of 240 kilotons of meta, which is, so we would have a leadership position in 19 in this IPA business. But the spreads in 17 have been very, very good. So we do expect the spreads to normalize in 18 and in 19. But the volume impact will be higher than the spread normalization. So the total profitability from the IPA business will increase, not in the same proportion as today, but in totality it will be still significantly higher than what it was today. On the cracker, I would not be too worried. So mechanical completion is completing this month, November. Pre-commissioning has started on the systems which are ready. All the pre-commissioning activity will complete by middle of January, and then it's only once the pre-commissioning is done, we are just, assuming it will start up sometime in first quarter. It could be end of January, it could be Feb, but sometime in first quarter. So we are now in November, middle of November, so we have pretty high visibility at this time.
Okay. I have two questions. First question is, I'd like to have a better understanding of the dynamics of the PET industry, because in the early, at the beginning, you were mentioning about the financial difficulty of M&G and JBF, and given that M&G has three PET plants, and 2 of them are filing the bankruptcy. My question is, are these 2 bankruptcy still under operation, or they suspended the production?
So-
Okay, yeah.
So both of them have suspended production.
Okay.
One of them is Apple Grove, Virginia, where we supply the PTA, and that is the plant that is not operating at the moment. The other plant, the other one is Corpus Christi, but Corpus Christi was not operating in any case. That has a lot of work still to do. Then they have 2 other plants, one in Mexico and one in Brazil, which they have not filed bankruptcy. But Brazil is operating more or less 80%, I think. Altamira is not operating as far as I know today, but it's in the process of startup right now. So Altamira has 2 lines. I believe one of those lines should be starting anytime soon.
So of the one, if I understand correctly, of the MNG has about 1.4 million ton PET capacity, and of these 1.4, how much actually was under production before the bankruptcy?
All of them. Before the problem, they were producing 100%, 1.4 million. Today, they're only producing in Brazil, so they're producing about 350,000 today.
A million ton shut down.
So 1 million ton is shut down.
And given the 1 million ton, I'm sorry, I just want to make sure that I understand the industry correctly. So has the 1 million ton shutdown been already reflected in the PET margin, because in the West, the PET margin now at about $30 to $40 per ton. Has it been already reflected in your idea? Yeah.
So a couple of things would happen in that. The rest of the producers have increased the output. Pre-crisis, we used to operate at about 80 to 85%. Now we are operating at 100%. So we met some of that gap. Secondly, second half of the year is lower season. So the demand is not as strong as it will be in the first half next year. And thirdly, some imported material has come to offset the loss. But now with the anti-dumping announcement, we believe that next year imports will reduce and some of the shutdown capacity has to restart. If the shutdown capacity does not restart, then there will be even a further spike of spreads. Because you will then have to import material from countries which have a high duty, and then the import parity price will go up.
Can I say that based on the current development, we are expecting to see PET spread in the West, gradually climbing up? Can I conclude in that way?
Not even gradually. I think now it's been 2 months, so in my opinion, I may differ with my management. My management may say 3-cent improvement, I may say 4-cent improvement. So I'm looking at $100 improvement, they may be looking at $80 improvement. But anyway, it's substantial for our total business. And it's not only North America, it's also Europe. So we sell in Europe 1.2 million tons. We sell in North America 1.4, 1.5 million tons. So 2.7 million tons, we'll be able to squeeze out some capacity. We'll be able to run at higher operating rates. And if we get a $70, $80 improvement on the margin, we are talking about $200 million. No, $100 million.
Your calculation is right, 200.
200 is right.
But you won't get on 2.7. So I think let's understand like this. Today, the capacity is shut down, right? Customers are desperate of the material. They're importing from anywhere, wherever it is available, and whatever we could give them. And as Ms. Loya said, fourth quarter is a weak quarter. Now they're tying up the contracts for next year. So last 2 years, we reduced the margin by 4 to 5 cents or $100 per ton in US because of this Copper Christie coming up. Now the new contracts are already entered at higher prices. And people are entering into the contracts. And they have to, because otherwise there is no visibility that they will get the supply or not. And with this anti-dumping action, now cost will further go up if they import. So it is consistent. It is coming back to the old. These are not exceptional margin. This margin should not have destroyed in last 2 years. So it is coming back to the original market, 2 years back. And actually, if you go 4 years back, they were even $100 higher. When the Asian PTA margins were slightly better, import parity goes up. As I was just telling you, if Asian PTA margin improves by $20, import parity goes up. So what we have been suffering through is a bad margins in North America and Europe for last few years. And why these companies have failed? Because they invested, their financial discipline was not there, and the earnings were not supporting those investments, replacement. So any growth industry, when the spreads are not at the replacement level, it has to bounce back. And they are still lower than replacement level. Copper Christie total cost after today, before bankruptcy it went, is $1.7 billion, and 500 is more to spend. So it's huge. It's expensive to build plants.
Okay, one more question about JBF. Are they suspending production, or they are still running full production now?
So JBF suspended in Belgium. They were producing 450,000 ton. They just started one line on tolling with a small capacity. And Russell Khema is already shut down for a few months. So that capacity is out. And they also have the same financial problem. It's not Chapter 11, but they need a financial restructuring to shave off the debt before this can be acquired by somebody. And Europe imports, as I told you, even before JBF shut down, 570,000 tons. So 430 you add more, Europe's deficit is 1 million ton in Europe. So then they have to import from China, which is 6.5% duty, which was not factored in the pricing. And that's why exactly I said that our new contracts which are getting entered is 50 euro per ton higher. So all signs are positive.
Can I ask one more question on just trying to see playing a devil's advocate, for example, if you see in the US, because of the supply shutdown, suddenly you have a supply shortfall, and then they are looking at the anti-dumping investigation. Is there a potential where they say, okay, we have so much shortfall of supply that there should not be any import duties?
So trade rules of World Trade Organization has nothing to do with the material. The dumping goes that are you selling the product in the country below your cost or below your domestic market? So US already went through this is a very lengthy process, 9 months. Department of Commerce and the ministry goes through all this. So that dumping is established. So now they have established the injury, and now they will go through the dumping. So it is going to come, Where everybody is dumping, you have to reduce the freights and calculate as compared to domestic prices.
So they are independent of each other?
They are independent, absolutely independent. They have nothing to do, anti-dumping has nothing to do with other. Even antitrust doesn't look at anti-dumping. So what Mr. Lohia mentioned, one of the challenges which we have, if we acquire those assets, because if two players control 90% of the capacity, that's it. But again, antitrust goes, is it a global market? It's not like airline. Airline means you have to take either United Airline or you have to take American Airline. But here you can buy PET from anywhere in the world. So it's more free market rather than domestic market, right? So antitrust also looks from that perspective. Is it a global market? So we are working hard that if we do something, then we get the antitrust approvals. And consolidation of market brings always stability.
And just one more question. do you see any risks where some of, I mean, I'm not sure whether there are any mothball PET capacities in the world, but any risk that some of these capacities may come back on tracks just because you have a supply shortfall in the global markets?
So that's a good question. If you see, you fragment the industry into China and non-China. China has many small plants, unutilized assets. They have been there for many years. The industry utilization is 74-75%. They export 2.2 million tons. Outside China, most of the plants are running already at 95-100%. There is no mothball capacity except on North America where it was 85-86%. So you don't see any restart. Yes, there is a plant in Egypt which is shut down, which of course can restart. But again, they have to solve their financial problems.
Because of the seasonality, you would not get 100% utilization in any case. So during the season, the plants run at near 100%. And then in the off season, they run at 85%. So if you're running your plants at 90% utilization, that's a very good utilization for the industry. And then not all the plants are running because there is a turnaround schedule. So some 5 to 10% of the capacity is always not in production. So as DK said, except China, the global capacities are all fully utilized.
Fully utilized. Nobody is even thinking of building a plant because it takes so much money.
What has surprised us is in the past, 10 years ago, we thought that building a greenfield plant should cost $400 per ton PET. But now it seems that $400 per ton is not enough. It requires more like $600 per ton, plus the working capital. So the cost to build plants have gone up. We don't know this much because we don't build new plants, but cost has gone up, what we see in the industry. So therefore, the earnings also have to go up. So far the earnings have been, because of the low interest rate environment, people have been able to afford to live with low earnings. But as the interest rates go up, then the cost of working capital, cost of capital expenditure, all that will start weighing in on people's cash flow. So I think from a tailwind perspective, even the economies are doing better. Interest rates are gradually going up. All that is good news for Indorama because we should be able to see all of that getting translated into margins gradually. Even the oil price, I think that's
Brings a pull in there.
it's nobody asked that question, I guess, but oil price has gone up to $63 now, $64. Maybe it will head higher up with what the Saudis are planning. And that is very good because one of the things we have been saying for the last 2 years is that the decrease of oil price from 100 to 60 allowed many of our peers to reduce their working capital needs, and that helped them to keep operating their business. With the oil price going up, they'll have to add working capital to their business, and therefore they would have to try to increase the margins in order to support the higher financing needs for the businesses. Plus, as oil prices go up, there is an element of speculation in the customer's mind. So people start building the pipeline stock. At the moment, the pipeline stocks are very low. One of the reasons why you see, let's say, MEG margins being better, because the pipeline stocks are very low in the system. So there is low pipeline stocks across most petrochemicals. And with the oil price going up, people will start building up the pipeline.
The asset of M&G in Brazil, that one is independent from the Chapter 11 in the U.S., right? I mean, it's not included in the Chapter 11 filing in the U.S. Is it? So then, like the deal on that one can come before if you're interested to buy that asset, it could come before the conclusion of the Chapter 11.
That's correct. So the difference between Chapter 11 and distress asset is, under Chapter 11, you have to go through a court process, whereas Brazil would still be a distress asset, but does not have to go through a court process. So it's on the board of MNG. The directors of MNG can decide to sell that earlier. So it's a quicker process. No questions on fibers. Mr. Gill is sitting here. He needs to say something. So why don't you tell us a story, Mr. Gill?
In fact, in the last few quarters, I was hearing that HVA contributing relatively higher than rest of the businesses. But that, in fact, to me, I was thinking, if HVA contributes rather in percentage less, is better for IVL, which is going to happen now. That PET will really boom, and fiber business relatively, which was contributing earlier in percentage basis to the total EBITDA. And that's a good news for the overall IVL. I always wish PET and the PTA and the feedstocks made more money, and that's happening. But on the fiber side, I must say that it's a very stable business. We have Ms. Loya has been pursuing, and the board of directors have been pursuing a parallelly to the rest of the business, a HVA strategy, part of which is fibers, and we've been successful in creating today. IVL, your company, is the only company in the world which has a capability to provide globally all kind of tire cord yarns. We have a capability for rayon-based high-performance tire cord yarns, and nylon 6/6, polyester, and nylon 6. No other company in the world has this kind of diversity. And similarly, already in the hygiene business, we have done extremely well. We have a global position. So and third, I think the biggest thing which has happened in the last one month is the acquisition of DTF, the DuPont Tejan Films, which I believe is a highly, highly innovative company. And I think this will underpin IVL's innovation platform, and this will underpin our capability to create more capabilities in the polymer side. So overall, the fibers and rest of the HVA business certainly is a very stable business, and it will grow at a healthy rate. And we have, in whatever product we are in the HVA, we are amongst the top 1 or 2 candidates in the world. May it be hygiene, may it be tire cord, may it be airbags, or now we are entering the film. So I'm very excited to be managing this business alongside the rest of my team.
I think, Mr. Gill, I'd just like to add, because we're getting a lot of questions on acoustic fiber. Can you talk a minute on that?
I think I did talk about the acoustic fibers in one of the presentations I made to the TAI, but this is I just want to share with you the way IVL approaches the innovation. A few years back, about 7 years back or so, we felt that air and water are very important, and we entered the filtration business so that the world requires clean air, clean water. And we have grown the filtration business substantially. And that is one of the trends we caught early in our life, and we are leaders there, particularly in the United States. We provide filtration fibers, and now in Europe, we have moved towards the liquid filtration. And on the same way, we thought of a new trend to catch it early about 3 years back, when the electric cars were coming into the scene. So we felt that there'll be more demand for acoustic fibers, so that the noise level in the chamber of the car should will actually reduce from the engine, so there'll be more noise coming in from outside. So the demand for acoustic fibers. So we are making acoustic fibers, and we have commercialized already, and we do it in Wellman, Ireland. And you must have heard about a company called Autoneum. And he's one of our largest customer. Along with him, we do all the collaborative projects. So we believe that the future is in the acoustic fiber. That is basically to reduce the sound coming into the automobiles from outside. But not only that acoustic fibers are going into the automobiles, it also goes into the homes, in the roofing, and also in the panels, etc. So this is to reduce sound pollution. So we already clean water, clean air, less sound. So these are kind of new trends which we are trying to capture as we go along. And the third one, last one, is the composites. The composites are, we believe, no single polymer or no single fiber can deliver all the functionalities. You cannot just have nylon or polyester or cotton to deliver everything. So the future is towards the composite fibers, and we are highly we are working with the top automobile companies for the composite fibers, and these applications are mainly to replace carbon fibers and steel in applications. The last one, I think, is Mr. Louis can explain to you. We just saw one of the most innovative applications in Glanstoff, Luxembourg, which I specifically asked Ms. Louis to come and have a look. This is going into the rockets and the satellites launch systems. Would you like to talk about it a little bit? I think you saw that.
So these are rocket boosters, and the rocket boosters require a certain high temperature material which can withstand and then drop off at a certain altitude. So I was surprised that one of our companies is supplying to the French system the fiber that's part of the rocket booster. I mean, I myself get surprised every day when I visit the plants and see the type of things that our materials go into. We are not able to cover everything, but we are setting up a customer experience center in Thailand, and I hope that we'll get a lot of these examples in that. Maybe in 6 months' time we can have an opening and invite all of you to come and have a look. There are certain applications which are amazing, and it's a delight to see those guys, the scientists and the PhDs and the marketing guys, working with really sophisticated companies to provide them these solutions. So in a sustainable journey, I think both the commodities and the HVA businesses, they have a lot of value to give, because in this we talked about PET and PTA. These are cyclical businesses, but if you look at us over the last 5 years, we have been able to sort of withstand the fall of the margins because of our HVA strategy. So our HVA strategy hopefully will continue to develop. That will become our base, and then with our scale, with our intimacy with our clients, we should be able to get premiums even on the commodity sector. So somebody asked me when I walked in the room, I'm looking happy, and I said, this is, I have no reason not to be happy. Everything is working out as one can expect. So we have a great fibers business. And when it comes to lightweighting, lightweighting has been the core of all business development over many, many years. And our fiber group, they can help in that lightweighting. Sorry to sidetrack you from your questions, giving you some extra knowledge about a sector which sometimes we talk less about.
Any more questions? If there are no more questions, we'll keep this session to an end. And thank you very much for coming. Thank you.
Thank you.
Thank you.